All right, guys, so this video, I'm going to show you a new perspective, essentially called outside and inside zones using supply and demand, and it's going to help save you a lot more money and also make you a lot more money. So let's go ahead, dive right into it. I don't want to waste too much of your time. Now, let's go ahead and take a look at ES, okay, in this little time frame perspective here. All right, if we look at a 30-minute zone, 30-minute time frame chart, right, you can see we have a 30-minute demand zone right here, okay, and we have a 30-minute supply zone up here. Okay, now after you see that those zones have formed, so like let's say, price is right here. Let's say we're looking at price at this moment in time, okay? When price, you can see a very clear supply and demand zone formed on both sides, okay? On a time frame perspective, we'll look at like a 30-minute. You want to be careful of everything that you're trading in the middle, okay? And this all comes down to time frame perspective and what you really want to trade, okay? So let's say you want to trade smaller time frame, right? Let's say you want to trade 1 minute or 2 minute or 5 minute supply demand zones or whatever it is. Or you like to scalp, right? If that's the case, you want to be wary of where you're getting into your trades relative to that outside time frame perspective, right? So these are my outside zones, right? So again, if I'm looking at a 1 minute or 5 minute time frame to trade, your outside zones are going to be like 30-minute, hourly, 2-hour, 4-hour zones, okay? And your inside zones are going to be ones on the 1 minute and 5 minute, the specific time frame that you're trading. So if I understand, like at this point in time, that we have a nice demand zone down here, a nice supply zone down here, essentially what that means is everything in between is a little bit shaky. Okay? You want to be a little bit wary of everything that happens in between, because the best chances of you succeeding with supply and demand is going to be trading smaller time frame zones that align with higher time frame zones. Okay, it's all a time frame perspective shift, right? So if this is the case, and I'm looking at a 5-minute chart, we zoom in, there's not a lot of volume here, but stick with me for a second. If this is the case, you do not want to be trading these 5-minute and 1-minute zones in this little chop, okay? This is what we call inside, all right? Inside of your major supply and demand zones, right? All these zones here, it's not good price action, but you guys get the idea, right? This is the inside. Now, you typically want to stay away from this. Okay, you want to be cautious of when you're actually getting into trades. Now, can these zones still work? Of course, right? You're getting a beautiful 5-minute zone here. We got a nice tap, a little dump into it. Okay, of course these zones are going to work, right? But if you want to have the best chance of success, the highest winning percentage, what you want to do is stick with your higher time frame zones, right? So if this was the case, right, if I know my 30-minute zones are out here, what I want to do is wait for price to come and hit one of those zones, right? So on the downside, it would be here. So then after price hits a demand zone on a higher time frame perspective, I know that the odds and the odds of price moving higher has increased as opposed to going lower. And so when I have that piece of information, I now know I can trade my inside zones to the upside, okay, if that makes sense. Which basically means you only want to stick with demand zones after that happens. You don't really want to trade your inside supply zones because the odds of them working are unlikely, right? Perfect example right here, price, this is our 30-minute zone, right? That's actually right at market open. Price comes down, we end up shooting higher, we come back, we actually have a 5-minute zone here. We end up test a few minutes after. We even have another one right here that we get a nice bounce off of. So you can see when this happens, if you're sticking with demand on your smaller time frame zones, after price hits your outside zones, like this 30-minute one, that's when you can zoom in and start trading smaller time frame zones. Because you can see supply zone here failed. Okay? Supply zone here failed, right? We wicked above it. Okay, and then eventually this supply zone fell as well. We wicked above it as well. Okay, so you can see how by sticking with your outside zones and understanding your higher time frame perspective, you're able to stay away from all this chop in the middle. Okay, because here's what we know, right? If price is in a range, right? Maybe we have a demand zone, we have a nice supply zone, and we're kind of in the middle. We're going to have little supply and demand zones all in this middle area, right? Just like this, right? We're going to have zones like here. We're going to have zones like here going forward. But you want to be wary of these and ideally only trade your outside zones. So what you can do is you can wait for price to come down to a zone, get the reaction, and then trade the pullbacks in that move higher. Because now, at this point, you have a lot more confidence that price is going to continue moving higher. As opposed to here, it's a complete chop fest. We can just go up like this and this and this. We can go any which way, right? So this is what I'm trying to get you guys to understand. Now let me show you another example on Shopify. Okay, we go on like an hourly time frame. Okay, now again, this is where you need to look at all time frames. I always get asked, what time frames do I look at? You want to look at all of them. Okay, on a daily basis, I'm always going through all of these daily, 4 hour, 1 hour, 2 hour, 30, 15, 5. I'm looking through all of them constantly, right? So let's look at this, right? Looking like a 4 hour, nice 4 hour demand zone here. Okay, you can even call it a daily, it looks like, yeah. Okay, price almost taps it, we end up moving higher. And if we look at like a 15 minute, we have a nice 15 minute zone here, okay? We have this nice push higher, we have this fast drop lower, another fast drop lower, right? So after that forms, when price is in this middle section here, right? This is all, where is it? This middle section here is all simply just chop, okay? And there's going to be a lot of mini supply and demand zones that form inside this range, but you want to be very careful. You want to be careful of it, okay? Of course, sometimes it's going to work, right? This demand zone worked beautifully, but, you know, this supply zone ended up breaking it, right? This demand zone ended up breaking it. There's going to be a lot of times where if you zoom in even on a smaller time frame in this area, you can see how choppy it gets, okay? And you can see how all these zones start to break, because if you're looking at an outside time frame perspective, right, you need to understand the basis. You need to understand, like, okay, well, if price is all the way down here in the higher time frames, we're getting near a demand zone, probably don't want to be looking at shorting supply zones on a 5 minute or 1 minute time frame. Same thing with the other way. If price is all the way up here, price comes down, now we can start to look for some pullbacks to get in at supply, right? You can start looking for some pullbacks, maybe short there, right? Take your pieces, take your ins and outs, and then be done for the day, okay? So what I want you guys to understand is next time you're going to do a trade, okay, zoom out a little bit. Look at your 4 hours, look at your dailies. Like, you want to look at all the time frames, right? You know, maybe on Shopify, we're approaching a weekly supply zone up here, right? Just like this. Look at this huge move lower we get at this supply zone, right? So I'm probably going to be a little hesitant to start buy off demand in this area, okay? And if I know that, you know, we have a decent supply zone up here, we have a decent demand zone down here, and price is just chopping in the middle, maybe I'll just stick away and not trade, or maybe I'll just wait for the higher time frame. It's the same thing with wedges. I see this all the time. Price will make a move up and we'll start to wedge, okay? You know, you'll start to see something like this. See this little wedge forming. And yes, there's going to be supply and demand zones, you know, kind of in the middle here, but you really don't want to trade those, because in the middle of this chop, in the middle of this wedge, it's so choppy, there's very unclear direction. It's a lot harder to trade. If you want to give yourself the best chance of success, you want to stick with the highest quality setups, and that's going to be on the higher time frames combined with the lower time frames when everything is aligned, okay? So next time you go into trading, look at your higher time frames, okay? Look at your outside zones, your inside zones, figure out what is what you want to trade, what time frames you want to trade. Look at all your time frames, okay? Scroll through all of these constantly so you understand, you have a good picture of everything, and that's going to help you a lot in your trading, okay? So if you guys enjoyed this video, leave a like, subscribe down below, comment other videos I should make. Your feedback is very important to me, and I'll see you guys in the next video.